Stay cool and trade on. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 5th, 2018. Stay cool and trade on because it's getting a little crazy. It's getting a little crazy, and you definitely want to maintain some sanity in your approach to the market. We've seen volatility lately, that the kind of volatility we hadn't seen for a very long time. So I took my hook line, stay cool and trade on. I saw this article from all places, the Denver Post, and the headline here is "How to Keep Your Cool When the Stock Market's Going Crazy." And I thought this was going to be, some kind of helpful article, and maybe give some tips, about trading psychology and all that kind of stuff. Turned out the article totally got on my nerves because the basic thesis of the article concludes with a buy and hold recommendation, that no matter what's going on in the market, you should just buy and hold and weather it out. And they make some false points, I believe, based on false premises, that the people moving the market are only highly leveraged risk takers, and that all the rational retail folks, institutions and individual 401ks and all that stuff, even things out. I think that's a false premise because there's actually a record amount of cash flowing out of mutual funds and 401ks and that kind of stuff. People are maybe a little bit worried about giving back some of the gains they've made over the last several years, very impressive gains. And this idea of buy and hold only and weather it out, and eventually it's going to come back. Historically that's true over a very long time frame, but I think we can do a lot better than that. I don't think we have to weather 30, 40, 50% pullbacks, particularly if you got a 5-year or less horizon to retirement. If you remember in the last big market decline, 07, 08, there were a lot of folks who were ready for retirement. They had to change their life plans because all of a sudden their net worth was 30, 40, 50% down from where it had been just a few months ago. So I do think it's important to keep your cool when the market gets volatile, but I don't think keep your cool means just kind of blindly sit on your hands and watch your money evaporate. I don't think that's much of a strategy at all. So goodbye to that advice. So here's the S&P 500, and of course since early February we've seen volatility, a really big drop right down to the 200 simple moving average, a pull up to the cloud, and look, we found some resistance and are pulling back. This is classic Dow theory playing out right in front of our eyes. So Dow theory says that in an uptrend, price moves in higher highs, higher lows, higher highs, higher lows, higher highs, on, and it's been doing that. And now look, we've got a really sharp low and a lower high. So far it did not go on to a newer high, and it is pulling back, and it found some support at the 200 and some resistance at the Ichimoku cloud. So this looks like what should go like this and this, and at that point this 200 would become resistance where it was previously support. That's the likely scenario. We got to break that 200 for it to be absolutely, for me to say, yeah, the bull market, the big move is really coming. That's what I'm watching for. But this is the probability based on technical analysis at this moment. Let's drill into current price movement here. Let's go to a 60-minute chart. This will show it pretty clearly. This is again the S&P 500. We're going to a 60-minute chart. And if we measure this big move down from here to here, you can see we had a perfect Fibonacci retracement. It went a little high, but it stayed under a key disqualifying level, and so this gives us a price target for the next move down if we use Fibonacci extensions, at least here, down to about 2578 to 2449, and that looks pretty real. And so Monday morning, if this continues, that's where my trade's going to be, on the short side here, because I'm not going to sit through a pullback in the market and watch my capital evaporate. I'm going to be not only avoiding pullbacks, I'm going to be making money on the pullback, making profit, which we can. And you don't even have to short the market or like to trade options. You know, if you want to, SPY is the S&P 500 long, SH is the inverse, 1x inverse. You just go buy it if you think the market's going down. And those two symbols, SPY, SH, are ETFs. SPY tracks the S&P 500. SH is an inverse, goes the opposite direction without leverage. Pretty safe instrument to trade. So back to the daily time frame. I'm looking for a short on SPY, and I think it looks pretty good. Now, we've got some earnings coming up this week. We got some planned economic news. I'll review those here. But I don't think it's going to be the planned stuff that's going to move the market. We don't know what the catalyzing thing that will make the market turn around is yet. We didn't know before, and sometimes it doesn't even matter what it is. There just is a catalyzing event that gets investors' attention and changes their optimism to pessimism. But we got some earnings coming up here this week. Let's take a look at it. Some really big names. It's a big focus on retail, so it kicks off on Tuesday. We got Target before the open. We got Ross after the open. Then Wednesday we've got Costco. These are big names. Kroger before the market on Thursday, and then Big Lots on Friday. And we've got, Costco's right there. So some big names and a big focus on retail. So let's see how the earnings picture shapes up. That may be a catalyst. Could be to the top upside, could be going down. And we've also got some planned news. Not a heavy week for news. Some minor reports. The really first big important news coming out, the report coming out, is jobless claims on Thursday, and then the employment situation on Friday. Again, concern still lingering about the economy really heating up and maybe some more aggressive rate hikes from the Fed. So those are big deals to watch. So these economic reports, jobless claims, employment situation toward the back end of the week, and then earnings that I reviewed. Let's take a look at gold and oil before we wrap up here. So here's some key futures charts that I track. I'm recording this on Sunday afternoon, and so the overnight session has just started, and the S&P 500 futures are down about 12 points, so a negative open so far on the overnight session. Gold is moving down on the 10-minute chart just a little bit here. Let's look at the 60-minute chart from late last week. What we had here was a pretty clear pattern as it came up off the bottom of a high, higher low, higher high, higher low. So I'm looking for gold maybe to get started back up again, and I'll be looking at some long trades on gold. Not quite ready yet, but we're going to be watching that pretty closely. And we're seeing something very similar on oil. Let's look at oil futures here on a 60-minute chart as well. Pretty sharp pullback last week, but again, finding a bottom, at least with a higher high, trying to break through the cloud, taking out this. So we'll be watching to see if that was a bottom and if oil can take off. It's premature to try and go long on oil. So that's my outlook. Again, the S&P 500, classic technical setup for it to, big impulsive move, a correction. Looks like this is going to continue and carry through. Won't be smooth. There could be some volatility. It'll probably be breaking news that moves it rather than planned news, but we do have some earnings and planned news coming out that may add some momentum. If this thing on the daily breaks this 200, boy, all bets are off. But we may get a shallow retracement even into this target zone, find support again. That might be tradable and worth a small profit on a short-term trade. Breaks through here with some momentum, look out. We got the next big one coming. That's my forecast. All right, thanks for tuning in. As always, love to hear your feedback, your questions, your comments. Agree, disagree, love to hear from you. Trade safe, and we will catch you on the next one. Thanks. Bye.